Well, the subject of the paper by Battilossi, Gigliobianco, and Marinelli refers to a long debated issue in this country. Perhaps in no other country as in Italy one can find such a long track of discussions between banks and firms on the allocation of credit. So this is, I think, it adds interest to this paper and to the discussion that will follow. Please.
Good morning, everybody. Unfortunately, my co-author, Stefano Battilossi, is sick. He's in bed in Madrid, and we wish him good health, good luck. But the other co-author of mine, Giuseppe Marinelli, is here, and he's morally supporting me in this discussion. The title is The Allocative Efficiency of the Banking System. Now, a few words about the motivation of the research which we have done. Basically, we are in the field of finance and growth. We know that there is this vast empirical literature which suggests that financial development enhances growth. But when we go inside this black box of finance, we see that most studies use the size of the financial sector as a proxy for financial development. So you know that vast literature on finance and growth tells us that there are many functions which banks and finance can do to foster growth. One of them, for example, is to ease payments in the economy. One of them is to advise firms. And we want to concentrate on one which has raised a lot of debate in Italy, that is the allocation of credit. So moving capital in the places, in the sectors where capital seems to be most productive. I'm citing here Levine, 1997, because he gives us a sort of survey of the multiple functions which finance is supposed to perform to foster growth. Banks, of course, we are in Italy, bank-oriented country. We do not dwell on this. We focus on credit allocation by banks. However, in our research, we also consider capital markets because they are an important source for information. So we also use data, and I'll show you afterwards how, coming from the stock market. Naturally, we could say that we go back to the old Schumpeterian debate. So is this function of the financial system of moving capital to the more productive sectors, to the more innovative sectors, did it take place really in Italy? Well, I skip here all the Gerschenkron debate, the role that Gerschenkron gave to mixed banks of German origin in Italy. And we know now that Caroline Follin tested these hypotheses, and actually the role which Gerschenkron gave to banks is no longer supported by this empirical research done by Follin. But we have data. So our contribution to this debate is to look at the data about credit allocation. Unfortunately, our data start in 1936, or rather in 1948, because before we have several problems still in putting together the data. And plus, we have a gap right in the middle of our period, which we are filling now. And so in a later version, we'll have the whole time span of post-World War II. Our main question is this one. Italy's growth phases, did the banking system play any role in these growth phases. And also, we are within the debate of this conference of ours that is great phases of expansion and depressions of the world economy. So in allocating credit across sectors, did Italian banks respond time-varying growth opportunities? So this is the central concept that we have decided to use in order to check the performance of banks. Now, we have naturally to find out a proxy for growth opportunities, and we chose price-earnings ratios. And we calculate them for individual firms and then come up with the averages for industries. So why price-earnings ratios? Because when prices are very high in comparison with earnings, it means that those who buy stock think that in the future these stock will yield profits, dividends for them. And so that's a measure of how the market values the possibility of these stocks of generating profits in the future, that is, growth opportunities. Why should banks do this? From a macroeconomic point of view, so to speak, we like very much the idea that banks should give credit to those sectors which grow, because we all like economic growth, and so the growth of sectors means the growth of the economy. But from the point of view of the bank, naturally, we have to ask ourselves what is the mechanism which leads banks to give more credit to these sectors which have high growth opportunities. And our reply is that in those sectors which grow, which are expected to grow, you will also have higher cash flows, profits, and increased ability to pay loans back. More generally, growing firms are more alert, viable, resilient than mature ones. But, as I have been explaining to you, these growth opportunities are a multi-dimensional concept. But even if we limit our analysis to one part of growth opportunities, that is profit, I wanted just to show you with this slide that banks are also interested in profits of the firms to which they make credit, because a higher profit cuts the tail to the left, which means no profit at all. The left-hand tail of this distribution of profits means that the firm can have trouble in repaying its debt. That's why even if the bank only has a fixed amount, that is the rate of interest which has been contracted with the firm, which may be 3 or 4 or 5 or 10%, still the bank is interested in the fact that the distribution is more to the right, because the probability of going in trouble decreases. One question could be, but do not firms operate on private information about, do not banks operate with private information about firms? Sure, banks do act on private information, but we think that at the sector level, private information does not make much of a difference. Sector price-earnings ratios capture growth opportunities common to all firms in a given sector. Now, what could prevent banks from doing this, from distributing credit in the way which which I have described now? They can be more interested in collateral than in growth. They can be constrained by financial repression. But in principle, we do not rule out that these schemes may be good. That is, that a credit policy may be not only well-intended, but also efficient. Third thing, banks enjoy rents and establish strong and long-term relationships with firms. Now, this is a long debate about the advantages and disadvantages of relationship banking. I don't want to go into it now. Anyhow, overall, we expect that financial liberalization and competition should reduce these distortions, if in fact distortions exist. I mean, I was saying before. Data. How did we collect these data on credit? Because with the banking law of 1936, the Bank of Italy told, rather the Ispettorato of Credito told the bank that they should report their credit by sector, by industrial sector. Some 80 sectors were required in the Modello 101. So in this exercise, we use aggregate data for the whole banking sector. We have a discontinuity of in 1983 because the definition of sectors changed, and so you'll see the fact that we have to use two different panels. Also, we created a sample of banks, but we have not used it so far because we are just finishing to polish it. So this is a very rough description of the outstanding stock of credit by industry as a percentage over the total in manufacturing. You see naturally that manufacturing decreases as the economy goes into services, for example. You see other services, which is many things like software goes in these other services. Trade also grows a lot, but this is a real discontinuity because we have a change of definition of trade. If you go back to industries, you, for example, see that food products, as we can expect, greatly diminish over time. And also here you see the break, which I explained before, change of definitions. We have here still in a description. These are index numbers, the outstanding volume of credit between 1948 and 1971. So this is the first period which we have seen. I have difficulties in reading, so imagine you. But in this case, we have a generalized fast growth of credit to all sectors, but there are certain sectors, for example, machinery, which grow a lot from 1 to 50, for example, in the quantity of credit. And other sectors, service and construction sector, they also grow very much to 1 to 50 in, for example, hotels and restaurants. So we go on. This is the following period, 1983-2009. The growth is much slower. For example, you see the left figure, it goes from 1 to maximum 2.5 or 3. And in services and construction sector, you have much faster growth. For example, in utilities, water. The one which grows more from 1 to 40 is precisely water. And that sounds something about privatization. For growth opportunities, that is, our proxy is price earnings. We refer to the work by Beckert of 2007. We have firm-level data on paid-out capital, number of shares, earning per share, dividends. They have been hand-collected by Battilossi, who is sick in Madrid, from Il Taccuino Relazionista and from Il Sole 24 Ore. For the following period, data are from DataStream, and we are completing. These are mean price earnings by industry in the two periods. On the right columns, you see the ranking, which changes a lot between the first and the second period. For example, constructions goes from ranking 2 to rank 23, and industrial machinery and equipment goes from ranking 18 to ranking 9. Empirical strategy. How much time do I have, Gianni?
10 minutes.
10 minutes is fine. A panel co-integration approach. Now I go into territory which is not really mine, but I will try and make an effort. We test the hypothesis that credit volumes, in real terms, have a long-run linear relationship with growth opportunities, which are proxied by PEs. So PEs are P here. So you see the volume of credit depends on theta 0, which is a constant, plus theta 1, which is the important coefficient here, which multiplies PEs, plus an error. The sign of the parameter theta 1 is expected to be positive if the banking system grants larger amounts of credit to a particular sector as its growth opportunities increase. We have done 3 subsamples, 48-71, 86-94, 95-2009, whose definition is based on a priori knowledge about the banking sector history. Now, being me, the historian of the banking sector, I should dwell a little bit on this. I don't know if let me use just 1 minute to say one thing here. I have been talking before of financial repression in Italy. It could very well be that, for example, let's take one example of financial repression. You could not, in Italy, if you were a bank in, say, Potenza, make credit to people living in Taranto because you were based in Potenza, and if you didn't have a branch in Taranto, Taranto was off limits for you. So this facet of financial repression really means that the choice of industries to which you can lend if you are a bank is very restricted by this geographical fragmentation of the market. This, for example, ended in 1962. It was Guido Carli who decided to stop this kind of policy, which was inaugurated during the war by Menichella, who is here, our governor of the 50s. By the way, for foreign guests, these are all the governors of the Bank of Italy. So Carli over there is the one who undid the policy of Menichella in this specific sector of market fragmentation. Then in the early 70s, the regulatory burden on banks increased because there were these policies of compulsory allocation of credit. It's called in Italian vincolo di portafoglio. That is, banks were obliged to buy a certain amount of bonds issued by other institutions because the state was doing its own credit policy and was trying to tell the banks what they should do in terms of credit allocation. Naturally, as I was saying before, this could have been done well, or this could have been done in a bad way, so allocating credit to losers instead of to winners. But unfortunately, we had this big gap here in the data. Then we start again in 86-94. Then since in 93 we have most of the liberalization, say between 1990 and 1994, we have most of the liberalizations in the banking sectors. That is, we have privatizations, the possibility of state-owned bank of becoming limited corporations, shared corporations, and many other things which I cannot cite here. Let's go on with the error correction model, which is the second important feature of our method of co-integration. So we have seen before the long-term relationship, L, etc., and now we try to understand how the correction happens, which brings us back to the long-term relationship. These are captured by a panel error correction model, where the change, we have a delta here, in credit volumes is determined by the adjustment towards the long-run equilibrium and by the change of PEs. So we have a phi there which multiplies the other thing, which is the L, which would result from the long period relationship, but the actual L, we subtract from the actual L the one which would result from the long-term relationship, and we get the error. And the phi is the velocity with which the credit adjusts to the error. And it is supposed to be of a negative sign, because as we go too far on the right, let's say like this, the correction has to go to the left and vice versa. That's why we expect phi to be negative. The greater is the absolute value of this parameter phi, the faster is the adjustment. Preliminary results. First of all, we have to perform panel unit root tests that confirm that both variables are integrated of the first order in the first and in the third subperiod, while there is less evidence of non-stationarity in the central subperiod, but basically because we have still a small number of observations. As we have a larger number of observations, we will be able to be more precise in this, I would say, historical interpretation, because what interests us is how these parameters change over large subperiods. Co-integration tests reject the null of no co-integration for the first and the third subperiod, but are less convincing for the central subperiod. So these are the results. As you see, the beauty of this co-integration technique is that all is summarized by these two parameters. The theta 1, which is the long period relationship, and you see that for the first period, theta 1 is positive. For the third period, is positive. For the middle period, is negative. But as I was saying before, we have to be very careful in the interpretation of this negative value, because we have doubts on the relationship itself. Nevertheless, if we put aside our doubts, the long-term relationship would be negative here, which means that banks have performed not well. They did the opposite of what we would like them to do in a view of a growth economy. Then let's go to the velocity of adjustment, which is the other important parameter. Velocity increased in the third subperiod with respect to the first one, which means that banks seems to have responded well to the impulse given to them by liberalization and privatization. Interpretation. We have no evidence so far that the banking system of the Golden Age allocated credit inefficiently. Was it the effect of intelligent planning? Was it that their job of allocating credit was easier since growth opportunities were widespread in the Golden Age? Well, we will be able to get better results when we go and can use our sample, because with the sample we will be able to distinguish between categories of banks. From banks, we distinguish banks of the north and of the south, the dimension of banks also. So we'll have many more instruments to understand what was going on when we will be able to use the sample. The bank's response was muted or constrained in the pre-liberalization decade. Was that an inheritance of subsidized credit of the 70s and the early 80s, perhaps? Even if liberalization had already started, but more will be known here when we have the whole data set and we can fill this gap which we have in the 70s and early 80s. Anyhow, what we can say at this point is that liberalization improved allocative efficiency, and that our idea is that the present difficulties of the Italian economy do not seem to depend on banks, which overall have a better performance now that they had some 10 or 15 years ago. Thank you.
And first of all, let me pay a tribute to the choice of the topic of this paper, because I think that it deals with the fundamental goal of a financial system, a simple truth that so many bankers and so many scholars, for that matter, have forgotten in the last years. So I think the message of this paper is that we cannot write a proper history of a banking system without looking at its allocative efficiency. Having said that, of course, the problem of measuring allocative efficiency is very difficult, and we begin threading on very thin ice. And the main point of the Alfredo and his co-authors paper is the link between the credit and growth, and in particular the link between the sectoral opportunities that Alfredo has just mentioned, credit and growth, and the main question is how can we gauge growth opportunities, and they come up with, as we have seen, the answer. The PA ratios are a good proxy for the decisions that a banker must take. So, sorry. Let me skip the slides about the main points of the paper that we have just heard, and let me come up with the three main questions that the paper suggests. The first one is, of course, are the price-earnings ratios the best possible measure of growth opportunities? The second is, should we take into account also cash flow constraints of companies and sectors? And finally, should we also take into account micro and or structural variables, such as the customer relationship and the sound and prudent management, because stability is a necessary condition to me for allocative efficiencies. Now, beginning with the first question, are price-earnings ratios the best measure of growth opportunities? The authors dismiss 5 objections on price-earnings ratios, including the influence of riggers, manipulators. But I think that I buy their argument, but I think they should not understate the limited significance of prices before 1991, when eventually, at long last, exchanges were concentrated on the regulated stock exchange, and beforehand, only a limited fraction of negotiations were registered on the Borsa Valori, and so the prices were less meaningful. So it was possible to manipulate the whole market before 1991, and of course individual sectors. But the real point is, what about bubbles? Because bubbles are not the effect of manipulation, and even cyclically adjusted price-earnings ratio are subject to wide swings, not necessarily connected to growth, either predicted or realized. Just to show you the price-earnings ratio for the United States market since 1980 to today, cyclically adjusted, you see wide swings across the cycle, and this is not the Nasdaq, by the way. And you see also the dotted lines are the average, the long-run U.S. average in blue, and the average from 1980 in green. My wife says that I cannot tell colors, so I don't believe in what I'm saying. But you see how different were individual data from long-term averages. So the point is, can perhaps look at deviations from long-term averages instead of individual data, individual observations, which, by the way, is one of the categories that investors use normally, because they think that stocks are cheaper or expensive, looking at that relative prices more than absolute prices. Now, the second point is the puzzling behavior of Italian sectoral price-earnings ratios. First of all, looking at the data contained in the paper, it seems to me that some price-earnings ratios follow bubbles rather than growth opportunities and realized growth. I take the case of the textile industry, for instance, and the graphs are related to price-earnings ratio. The dotted line is a dividend, and the solid line is price-earnings ratio. And you see the textile sector, which is one of the main, one of the backbones of Italian industry, have an increase following the bubble of the early 60s, but then no apparent behavior since then, even if the realized growth, which is in the table above, shows significant differences. And also the electric and electronic equipment seem to follow more the 1960 bubbles, and afterwards no significant trend. Now, the real question is, do we have an alternative? And my point is, why not EBITDA, earnings before interest, taxes, depreciation, and amortization? Because EBITDA is the main indicator considered by financial analysts, for instance. EBITDA is or should be the main driver of a creditworthiness decision. Of course, I know that EBITDA is backward-looking, and Alfredo and his co-authors are looking for forward-looking indicators. But perhaps if you look at the rate of change, we could capture at least the trend, which is a proxy for growth potential, and which perhaps is what a banker is in his mind when taking a decision. Now, let me go to the second point. Should we take into account cash flow constraints? Of course, the greater the cash flow constraints are, first approximation, investments minus gross profits, the higher the importance of allocative efficiency. And over the entire period considered by the paper, we had huge differences from this point of view. We had periods of rate of investment over 40% of GDP at the aggregate level. We had periods of slow investment and high profits. And in particular, in the last period, the period of financial liberalization is a period in which we had low investment and high profits. So the cash flow constraint of the Italian companies was much lower. And in a few countries, we had, at the aggregate level, financial surpluses at in the corporate sector. It was a river flowing uphill. So what is the allocative efficiency when the rivers flow uphill from this point of view? And now 3 minutes for the third question. Should we take into account structural variables? First of all, the case of the customer relationship, which is the backbone of our bank-oriented financial system. And we have been saying for decades, Gianni and I, for instance, that customer relationship in Italy was not strong enough and things like that. So, and the main question is what should a bank do when a company meets a difficult situation, is in a dire situation, and its price-earning ratio drops? I think that the Rajan Zingales that they quote, the authors quote, Rajan Zingales stretched their point too far and understate the importance of long-term relationship, because they say, and they cited the case of the Japanese company, they should let it go and fail. I think that the problem is a little more complicated than that, and there is a very, very delicate equilibrium between long-term support and financing an inefficient company in the long run. But nevertheless, we have to try to take that into account. So I think that deviations from allocative efficiency, stricto sensu, can be seen as an evidence of long-term support, particularly because we are looking at sectors, not individual companies. And particularly, customer relationship was particularly important in a period of restructuring after a major external shock, such as in the 70s, for instance. And the point is that that period was just the period of what the authors call financial repression. Now, and this raises an interesting point. By the way, I think that the authors stressed the importance of vincolo di portafoglio, mandatory buying of securities issued by long-term credit institutions, and understate the importance of massimale, the credit ceilings imposed to. And I think that the massimale was more important from a allocative point of view, and it is not mentioned, because the effect of massimale was to freeze credit allocation, the short-term component, which is the most important in the financing of Italian companies, while the vincolo di portafoglio was related to securities issued by istituti di credito speciale, or the long-term institutions, so had at least theoretically benign effect to insulate, to protect this component of the credit supply. The problem was the distortion deriving from credit subsidies that limited allocative efficiency. And of course, we know that credit subsidies were a major driver of long-term credit, and we all know the sad story of the Italian chemical industry. Now, I think that there were for sure credit distortions in this point, but it is also true that at that time the credit system gave great support to the first significant restructuring of the Italian industry after the miracle of the 50s and the 60s. The evidence and history suggest that negative effects were stronger than positive ones. But I think that as a matter of principle, in a period like the 70s, a positive sign is not necessarily to be expected from this. In other words, a negative sign, the negative sign can you find, is not necessarily a measure of inefficiency.
I'm not sure I understand this point.
Yes, you can.
Okay, right.
No, could you just repeat this point, because I am a bit confused about positive or negative sign. You mean the positive sign of the long-term relationship?
Yeah.
This one.
The positive sign of of your regression. The positive sign is a measure, an evidence of allocative efficiency.
Okay.
You find a negative sign in that period. But the negative sign is not necessarily an evidence of allocative inefficiency.
Okay.
Okay.
Because you mean of restructurings which were done and the banks were helping
the long-term support. Mm-hmm. And by the way, also the previous period, 48-71, had heavy structural controls. For instance, the attitude against competition. I can feel the severe eyes of Guido Carli on me from the picture above, but it must be said that in that period, in that very room, Carli said that the cartel was in the public interest. The long and short of it is that financial repression was not that harmful in that period. So the point is why financial repression was not harmful in the 50s and was harmful in the 70s. And finally, let me look to my last point. the structural variables, because Italian bank strength increased after World War II, unlike the Anglo-Saxon banks. And this might be considered an important driver of allocative efficiency. Just let me show you this graph. On the left side, you have a long-term measure of capital strength of the Anglo-Saxon banks, United States in blue and the UK in purple, and from 1880. And on the right side, you had the data for Italian banks taken, thanks to the work of Riccardo De Bonis, who is here, I suppose, and was published by the Istat. This is the measure, the ratio of capital to a denominator made of loans, securities, and stocks held by banks, so quite a good proxy of total assets. Of course, the two sources are different, and I wouldn't use so light-heartedly this comparison in a paper, but I'm leveraging on my position of discussant, and I can there to use that comparison, and you see that there are two different words. And while the Italian banks were strengthened after the war, the UK and US banks continued to decrease their capital ratios. So the point, and I'm concluding, the Italian banking system had a few banks very fragile since the 70s, Banco di Napoli, Banco di Sicilia, and IMI, just to mention the most important, even if for different reasons. Banco di Napoli and Banco di Sicilia were met crisis because of a rotten political system. The IMI for different reasons, because for a bad industrial policy, but at the end the result was the same. So the point is, if you have a banking system which as a whole was strengthened during the period, and if you bad apples, does that change the picture if you try to take into account or to exclude from the calculation these cases and look at the main banking system? So the point is, if you exclude these banks from the exercise, the positive side could be strengthened, and possibly we can have a measure of to what extent individual bank crisis can influence allocative efficiency. Thank you for your attention.
Thank you, Marco, for our contribution full of suggestions. And now, any questions?
I'm sorry that I came in late. Probably Alfredo has already tackled my objections in advance. My point is following. PE is a widely observable variable. It's common knowledge. Banks are supposed to create their own, to create knowledge, to be able to exploit information they get in their transactions with the customers, and be able to go above and beyond what the market knows and thinks. If we assess the bank's allocative efficiency purely on the basis of the extent to which they conform to market expectations, what exactly are banks for? I'm not saying that this should be disregarded. I'm just puzzled that this is the only gauge we use.
3 points. One is, again, raising the point of looking at other variables beyond the price earnings, maybe EBITDA, because of a different reason, namely that there is a relatively modest representation of Italian firms in the Italian stock exchange. So the share of production is not really well represented. The second one is whether there is also a missing opportunity, which is financing foreign firms, especially after 92. So maybe Italian banks should also finance foreign opportunities. And finally, what about firms? This analysis is very good, conditional on existing firms. But what about the firms that could have grown and could not grow because they were requested too much collateral? So what about the efficiency in promoting the growth of new firms?
First of all, on the side of the independent variables and the price-earning ratio, I fear, I don't know if volumes, exchange volumes on the stock market could help also to cope a bit with the problem of how a price-earning ratio is meaningful. Because I think it couldn't be too difficult, because actually we worked on the period 1950-1965, and we have by sector the volumes exchange in the bourse in Italy, and so trying to see if it adds some significance to the price-earning ratio. Then again, in the search for determinants, you could look at export performance by sector, because in the end it's true that it was so important for the overall performance of a sector across all the period you cover. And then I elaborating a bit on what was saying Professor Onado. I think it's really crucial, actually. I know this is more tough, the relationship between short-term credit and long-term credit. And we have some statistics on sectoral destination of credit by Istituti Credito Speciale. And finally, for what pertains to the coverage of the stock market in the Italian landscape, both back in the 50s and 60s, and it's a problem even nowadays, you could look at the 200 more important firms in the industrial landscape we have both back in the 50s, 60s, and nowadays, because I remember I worked on the previous period. Actually, among the 200 more important firms covered by the studies at the time, actually were even less than 50% the biggest industrial firms listed in the stock market. But you have data on those 200s, so you could also try to cope and actually see, arranged by sector, if these different firms behaved, those listed and those not listed. That's it.
Hi, I'm Tomo Yoshida, Bank of Japan. I would like to comment three things from the experience of Japanese banking system. First, my first comment is that the analysis of the allocative efficiency of the banking system can only be done with the soundness of the banking system. When banks face some trouble, such as the capital shortage, we cannot expect the allocative efficiency. So it is perhaps better check the historical record of the soundness of the banking before we embark on this kind of efficiency analysis. That's my first point. And my second point is that the existence of the long-run co-integrating relationship between price-earning ratio and increase in loans is troublesome when we face when we enter in a bubble period, because when the stock price went up, then comes an increase in loans, and that fuels the bubble, and so that sort of makes sort of an explosive process. And that's my second point. And my third point is that perhaps this issue of allocative efficiency can be analyzed in terms of record of the banks write down or bad loans, because if they allocate loans efficiently, they are less, write down than bad loans. Yeah, that's all. Thank you.
Well, I have to choose a little bit. I want to apologize with those who have made who have asked questions, and I will not be able to respond to them. Let me start with the one which I almost totally agree with my discussant. That's about relationship banking. Should a bank help the firm in bad times? If they do, it looks like our PE's ratios go down, so that it looks like they behave inefficiently, but in fact they are doing something which is pro-growth, which is in favor of growth. Now, we had, as you might imagine, a discussion about this point with my other co-author, Stefano Battilossi, who is sick in Madrid, and he is the one very much against relationship banking, while I'm not so adamant in condemning this way of doing banking. So we'll continue our discussion a little bit and perhaps come up with some solution to this puzzle, which I agree it's an important point to refine a bit more in the paper. For many other suggestions, I would say that we are constrained by statistics, because the beauty of our exercise is that we have these statistics which go together in a sense. We have these sectors which have been defined by the Bank of Italy, and we have to use other statistics which match these sectors. So I had, for example, the all 600 stock which was listed on the Borsa of the Stock Exchange of Milan, and I have to put each of these stock which existed all over the Italian history in one of the slots which the Bank of Italy had created before. But those slots were created with a certain idea. And for example, for exports, your suggestions, we do not have the same slots. If we want to make the two things comparable, we lose a lot of information. This might be also the problem of using EBITDA, your suggestion and the suggestion of Giovanna Nicodano. But the main problem here would be, I'm very much in favor of forward-looking indicators, but we will think about it. Certainly we will do. Another point is that of bubbles. I agree. There is this problem of bubbles. In fact, we had a graph which we chose not to show, where the effect of bubble was more visible, because I thought, well, let's not talk about bubbles now. Let's our discussant talk about it. So we'll refine our thinking about these bubbles, and maybe we will be able to find some way of going around this problem. About the capitalization of banks, I'm not sure I understand the knack of this argument. But just for the historical record, if you look at the time profile of this capitalization, you will see that in Italy, until the late 70s, this capitalization does not go up, because Menichella didn't give much importance to capitalization. It started later, almost. It was Paolo Baffi who started, and in the late period also a bit Guido Carli, and they started slowly to come up again with the issue of capitalization of banks. Now for Federico Signorini, I have thought about this, because you made this observation over lunch one day a month ago, and so our answer is this. Private information is indeed very important, but it is at the individual firm level. So a bank knows what her firm, I mean, I'm using this feminine pronoun for banks. I'm not sure it's right. What her firm is doing, how is the governance of the firm, how is the quality of management. But at the sector level, we figure out that this private information doesn't count very much. I mean, we are only using average sectoral PEs, and at this level, we think that most of the information, I would say, the 99% of information is public, because people do know how technology is evolving, how markets are evolving. There is nothing private, we think, in this matter. Bubbles a bit. Cash flow constraints. Cash flow constraints is important. In fact, there are studies, now I don't remember the names, I'm terrible with names, in which an exercise like this has been done. That is, banks are important insofar as they go over and they are able to overcome the obstacle of cash flow constraints. Let's see if we can do something about it, and about the relationship between realized growth and actual growth. We have this.
Unexpected growth.
Expected growth. Again, we have here a problem of statistics, of matching statistics. We are trying. We have done some work on this, and we'll do more. Thank you everybody for your comments.
Can I